Hi everyone, welcome to this month's free market commentary. Just going to have a look through the usual US markets, then we'll take a look at some currencies for the month ahead and see where the potential trades might line up. We've had some really nice moves in September, and it's been a strange month though that the markets have moved that quickly that the actual number of opportunities, although there's been a lot of movement, have been less on the higher time frames. So what we've been noticing is the day traders had probably more opportunity than the swing trader. However, that's not a bad thing because it shows that there's volume coming back into the markets. So it means that this next phase, I wouldn't be surprised to see if October, November, and even into December we start to see some really nice swing opportunities. Now, I just want to cover the Dow, the S&P, and the Nasdaq because yet again we're kind of seeing the same pattern throughout, which is we're getting a modest sell-off that isn't really materializing. We've seen this many times. We got this one back in January of the start of this year. We've seen this one in July, and then we've seen this one again. Now, for me, it's always about the structure of the market and the levels. Therefore, for the market to prove itself, it has to do certain things. And although it starts a sell-off, a bit like what I was saying there about some of these big moves, that should only really be the first phase in overall moves. And that's what I would be looking for when it comes to the US markets. Because what we've ultimately had is we've had a really aggressive move down, which finished on, that would have been the Thursday, but you can see that we've got a really large reversal candle, and it's the same on the S&P as well, and I think the Nasdaq's the same. Yeah, so you can see with each of the US indices, we've tried to have that sell-off, and then we've shown a really strong buying bias by putting that reversal candle in, which is then followed by a massive move up. Now, where does that lead us then? At this moment in time, in all fairness, we're a bit no man's land because we're kind of in the middle. We've broken support, we're sitting at resistance, we're not really trending down, and that leaves it a bit vague. So what I would say, and this is where we want to be prepared because this can quickly change overnight. If I take each of the markets, I can take the most recent highs and lows, because what I would look for is I would look for opportunities there. Because if we come up to those highs or we come down to those lows, what that then means is we have the potential of making a new high or a new low. So it's at those levels I would be looking to trade. Now, you've really got the three options if you consider the three strategy types. If we come back up to the highs, we could look for a short-term reversal, or we could look for a consolidation to break out, and lastly, we could look for the breakout to then pull back. Same as if we come down, we could look for a short-term reversal. I would be more inclined to take the reversal up here because the overall market has been running up for a while and is showing signs of extension, whereas the sell-off could be new into a sell-off, so the probability of the reversal working is less. So if we come down, we can look for both opportunities, a bounce off of that level, a consolidation with a breakout, or alternatively the breakout followed by the pullback. And that could all easily happen within the coming months. So keep your eyes peeled on all of those. Now I'm going to take a look at pound dollar cable because it's had a really big run down, you can see. Now, one of the really interesting things about this is it's a market that I'd been covering over a couple of months. It was about 2 months and then it finally rolled over. And what you'll see is it didn't really do much of a pullback until here. And the problem with that is that was near the Scottish independence referendum, so it means that the market was quite volatile. So actually, again, like I've already said, there was some lovely opportunities to day trade this, but the swing trade just wasn't there. But what I would be looking for now, and this might actually happen in the shorter term, is we can see that we've got these lows just to the left there, and we're almost at them. So what we could look for on this market is now that we're showing signs of a downtrend, we could look for pullbacks coming back up. Now, the only difficulty we have is if we come back up here, we would re-break what is supposed to be a support, which we broke in the first place. So you've always got the risk of it then coming down and bouncing off of it, and that's just to be aware of. But it is showing bearish signals. So what I would be looking for is, can we either get the pullback opportunities or the consolidations leading to the breakout opportunities? And if it was to come down to this level here, that's where we could look for the consolidation stroke into the pullback. That would be the preferred option to get get through that level. Alternatively, if it consolidates here, we can maybe look for a short-term trade from here down. We are sitting on the monthly S1 pivot, which can be a reasonable place to consider the reversal trade. Only reason I'm not too happy with that is we've broken that support level and we're also no man's land. We don't really have any decent price level there to trade off of. So look at that from a trending point of view. Now, lastly for this month, I'm going to highlight gold. Gold, as I said a little while ago, came off my radar because it just wasn't. It was breaking down, breaking up, and it wasn't showing its hand. It wasn't giving us a clear indication. But it's become much more interesting. If we just zone out, you can actually see that we're almost back at these lows here. We've literally just missed them. So what I would be looking for is, firstly, because we've done this run down, we could easily look for a nice bounce up off of that level there. Then the alternative to that is, if we consolidate, look for the breakdown followed by the pullback. So gold's very much back on the radar. I would like to see it come a little bit lower first before I would consider the reversal, even maybe to hit that monthly S1 pivot as well. So we can see that each of the markets, if we prepare ourselves, the US markets won't be in the early part of this month, but might be the latter part. But one or two big moves and we can reach those levels. Pound dollar, gold, they're already lining up or in good places where the trades could come around quite soon or earlier on in the month. So that gives you plenty of markets to look at. Obviously, go through your own analysis, find your key levels and find what strategy type will fit those levels. So that's us for this month's free market commentary, and I'll see you in the next month's free market commentary. For our subscribed paid members, I'll be back next week with the weekly commentary. So thanks for watching this, and I'll see you the next time. Bye for now.